My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain, but to educate, teach, and explain to you why days like today can happen. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Turns out, get this, inflation was all about logistics. We caught a real break today with a much lower than expected consumer price index number. And a huge part of that came down to how much it costs to get goods to the consumer from here to here. And that's how the Dow skyrocketed 1,201 points. S&P surged 5.5%, and the Nasdaq roared 7.35%. Because lower inflation means the Fed won't need to raise interest rates as aggressively as it may have thought it needed to. Logistics is the art of getting goods where they need to go. And unfortunately, though a boring topic, supply chain disruptions have really been the biggest source of inflation since the pandemic got rolling. And finally, they are peaking, and that's definitive. And it's huge. That's what the day was really about, after all. Why would the Fed need to keep tightening ever harder if the root cause of inflation, moving stuff from place to place, is finally going in the right direction? I know it's hard to equate this magnificent rally with something as prosaic as the freight business, but they go hand in hand. When you look at all the positives that went down, if you check them all off with today's CPI reading, you come back knowing that it was just hard to move goods around. I mean, maybe people were tired, we had a shortage of equipment. These shortages then led to vastly inflated prices to you, the consumer. And those are peaking. Of course, you can't point to the Nasdaq up more than 7% and say, well, that's all about getting our supply chain house in order. All right, many of these tech companies have barely any transportation costs. But you see, the Nasdaq runs on lower interest rates. Same way, say, like America runs on Dunkin'. When inflation cools, interest rates go lower. As they did, they went down huge today.
House of pleasure.
Plus, inflation erodes the purchasing power of your dollars, your future dollars, which makes long-term growth stories less attractive. There's a lot of those in the Nasdaq, ain't there? So a good CPI causes money to flood into the most aggressive tech stocks, including the cloud plays, the conceptual names that are far from turning a profit, and of course, fabulous stocks like Apple, which you were supposed to sell, right? Didn't all those analysts say sell it? I forget. Sell it, trade it, short it. What were they saying? Get rid of it, that's right. Now, we know the cloud stocks have been awful performers, right? That's in part because they're all jammed together in some ETFs that a lot of brokers like to make money off of. But today, the ETFs pressure allowed the cloud plays to soar. Of course, the banks do well here, too, because if the Fed can keep rates this high but not this much higher, these companies can make fortunes off your deposits while facing not that many defaults. Remember, here's something I learned when I took economics at Harvard. Remember, the banks pay you next to nothing for your deposits, then turn around and invest it at 4.3% in the 2-year Treasury. Do the math. They get 4.3%, and this is something I learned in economics class. You get bupkis. I got an A. But let's go back to the original thesis. When inflation really started to roar, it was the consumer, right? At the consumer level, not really so much at the producer level, although obviously fertilizer went up because of Ukraine and oil went up because of Ukraine. And how much do you hate the Russians? I mean, seriously. Very few people saw this thing coming, though, aside from, say, a wise man in Seattle. And that wise man's name is Rich Galanti. He's the CFO of Costco. By the way, if you read his excellent conference calls, he was adamant that logistics was the big battleground. Specifically shipping and trucking. Not something I heard from many other chief financial officers. There just weren't enough ships to bring the goods we needed from overseas. The ports were jammed, not enough truckers, all this stuff. Turns out the port situation mostly came down to labor unions taking advantage of the situation. Hey, what the heck? Bankers took advantage in 2008. Hey, these guys got a longshoremen got their shot. They took it. More importantly, though, there weren't enough ships. So what did Costco do? It created its own armada, both to ensure they got their own goods, but also because they wanted to know the true cost of moving the stuff. Costco is now busy demanding that any price increase is based on something that went way up during this period but not coming down. Take it down, because they work for the customers. It's why the Charitable Trust owns a ton of the stock of Costco. Of course, the decline in oil prices month over month also helped bring the CPI down, even as the war in Ukraine's been a real sticking point year over year. Same with natural gas. That came down a tad too. But to get to the real reason why we may be in better shape with inflation, you need to just look at a freight company called C.H. Robinson. Oh, I saw you yawn, you son of... This is a huge business. So don't go and say, who cares about C.H. Robinson? It's got $28 billion in freight under management. How much freight do you have under management? And more than $20 billion in annual revenue. Make it one of the top shipping companies out there. It's a big deal. And because you don't care, I'm going to do a little shock. Woke you up. And at the height of the pandemic, C.H. Robinson was one of the main choke points of the global supply chain crisis. They needed more trucks, more drivers, more fuel. So the cost of everything went up, and they had to pass it on to the people, say, at a store, who then had to pass it on to you. The company struggled to meet demand. They weren't a bad actor, so did its competitors. It got to the point where those giant sleeper trucks went from $30,000 for the pandemic to $120,000 at its height because there was such a shortage. Meanwhile, too many drivers retired, so they had to bid up the price of the ones who were remaining and teach others. C.H. Robinson figured that we might see a peak in the cycle sometime in 2023 or 2024, according to their October fact sheet, which is excellent if you go to the website. Turned out, it happened immediately. So quickly that today we learned that they may have to lay off lots of mostly white-collar workers because the slowdown happened that soon. You know what? I want to conclude. Like they're paying attention to me because of C.H. Robinson. You know what I'd like to conclude? That October was a very weak month in this country. That's right. October is going to go down. When we look back at this period, we're going to say, holy cow, October's when it started. That's when the slowdown started. Oh, and the sleeper trucks, they aren't back down to 30,000 yet, but they're at 65,000. Okay, almost in half. The price of diesel's come down a lot, too. C.H. Robinson can't charge as much when these costs go down. That's where the big deflation gain really kicks in. And let me tell you something. That's coming. What else? We know apparel's coming down as the retail situation looks very promotional as we head into the holidays. That means you're going to get some really great buys at Ollie's, I'm a member of the Army, or Cramer Fave TJX. It's in the Charitable Trust. The latter's a huge source of lower prices. Remember that anything that gets moved from the distribution center of clothes to the TJX store costs less. That's why you may not see it, but there's be a subtle rollback. How sustainable is this? Lots of analysts have been waiting for a day like today to downgrade their favorite stocks. I do expect negativity tomorrow about the semis, the software companies, the cloud. Somebody will say something bad about Apple. I bet we'll get the usual downgrades from the people who don't have any guts. Again, Apple. But the bottom line, what matters is the choke rope of inflation may finally be loosening or at least fraying just when we least expect it. All on a day when some crypto clown named Sam Bankman-Fried, right out of The Simpsons, was supposed to crush the entire market with his 15 minutes of ill-fated infamy. Let's go to Brian in Connecticut. Brian.
Hey, Jim, how are you?
Brian, couldn't be better. How about you?
Good, thank you. Long-time caller, first-time listener. Quick shout-out to my sister, Sheena Bass. We are members, and we love you.
Oh, man, they're members of the club. We want club members. What's up?
How you doing, Jim? Calling about the stock Unity. Will the effects of the metaverse have a rippling down effect?
Okay, listen to me and listen good. This Unity is not a good stock, not a good company. It's just a good stock today. Let it go up another 3-4 points, and then we say goodbye. All right, listen to me. The choke rope of inflation may finally be loosening, or at least fraying, just when we least expect it. Man, I tell you, a special Veterans Day show. What can the Navy teach Wall Street about leadership? I'm sitting down with the Secretary of the Navy and learning some important lessons. Then Campbell's Soup, CEO Mark Klaus. He knows how the military service can aid in making some smart business decisions. And I'm hearing more about his service has made him a stronger leader. Plus, Goldman Sachs has always been on the forefront of veteran hiring. So don't miss my exclusive with CEO David Solomon from the company's headquarters in New York City to hear how the bank is continuing to lead the charge. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.